Hi, it's Steve and Joe from Fresh Agenda. And Steve, this week we're back a bit sooner than usual with a trade update and a little bit of an update on the value of milk in Australia, and then of course chat of the week.
Yep. So we've added up global trade. It seems like ancient history. It's still 2020 and we're
November. Yeah.
Only a new year.
Yeah.
But this is data through to the end of 2020 through November. We do have a bit of December data, but we don't have a full picture. So back in November, trade moved ahead 4% over the prior year. That's in milk solids equivalents, so fat and protein in products.
For the month, yeah.
For the month,
yeah.
Not too wild. When you look at the quarter, it was flat over that quarter. That's the 3 months to November, what we call the quarter.
So there's some timing issues in there, aren't there?
Yeah, as you can see the chart on the right, the upper right, that we had a bump earlier last year with product going into China, which lifted. So this year, we've moved ahead of that just on comparative terms. So it is a bit deceptive. I think November's a great month. Quite mixed. Skim milk powder's down. Whole milk's still strong because of that shuffling timing again.
Yeah, and cheese is also the star you've got there.
Yeah, I do. It's star, yeah. But when you dig into the detail, it's not that exciting.
No. Why are we talking about it?
Well, it's just China's staying well ahead.
Yeah.
Right, obviously. But then when you look down our league table, the 3-month league table, only South America here comes second, and the rest is either tiny or in retreat. So. And
the South American trade is mostly internal?
Yeah, there's growth in the internal trade between Argentina, Uruguay and Brazil. Brazil having some shortages of milk, lifted up the cost of milk, lifted up the difference between imported and locally made powder. And there was a lot of subsidy provided to consumers in Brazil, which all went into fresh product because that got, demand got driven up. So that as that growth in Brazilian milk comes back because they've lifted milk prices, that's going to be an interesting challenge to see whether that eases out of the system or not in Q1. But down the bottom of the league table, that is, Mexico was still weak. Skim milk powder has lifted since these numbers. UK stayed fairly weak because we've seen a dip in their cheese imports with local demand being so weak, and MENA is fairly ordinary as well. They've come off the boil. So, yeah, it's quite a mixed story. Our detail on this comes out to our subscribers later this week.
Something to look forward to?
Well, yes, always. So, commodity milk value in Australia, closer to home obviously, but the Australian industry output has shrunk back to being level with the prior year in the latest data. The milk value is still well below where season opening milk prices, the expectation of the full year from season opening milk prices.
Yeah, there has been a bit of discussion just this week about the prospect of further step-ups, and we're not seeing much prospect there given where we were to open and where we are now, even though the CMV's come up a little bit.
Yeah, so there's the start of year outlook that we had. We're saying the high fives, $5.90-ish Australian per kilo milk solids. So yeah, we've seen it haul itself back up, as you would have seen in the previous chart. But here's another way of looking at it. This is in the last couple of months. It's surged with prices coming back. Still, our dollar's still strengthening to take away some of that advantage, but it has come up. None of this is bankable yet.
No.
This is on weekly spot prices, driven strongly from recent GDT results, which move into the quotes that we take from New Zealand for these workings. So just, with our dollar still expected to stay in the high 70s for the year, some of those commodity prices may come under challenge as we go forward, because they are at the upper end of experience in terms of the buying regions.
Yeah.
Skim milk powder, whole milk powder, and butter certainly. So just holding on to that sort of level of price, we think right now is still a bit of a stretch to expect this is going to be
Yeah, that's a really good point, because obviously you've just said we haven't got as much, or we're just in line with production from last year. We probably haven't got a lot of product for spot trade at the moment, given where we are in the Australian season. Also, for those who don't follow the commodity milk value analysis that we do and tweet out every week, or no, we put it on our website every week. This is the underlying commodity milk value. You add about 50 to 60 cents on top of that to come up with an equivalent or an indicative farmgate milk price for the southern region of Australia.
Yep.
So obviously milk prices don't move that much in Australia. We've got an opening price. If there's any headroom, it steps up. It doesn't step down. So what we've had this season is really a fullish price to begin with.
Yeah.
And a CMV that's moved around a fair bit since then.
Yeah, and we're not back to that opening expectation. So, the headroom that some out there are calling for to say, surely we haven't had it for so long. That doesn't mean you'll get an increase in price, because the conditions aren't back to where they were. So, all right. Joe, chart of the week this week about volatility, and oh gosh, what have I done?
That was not the chart I've chosen, Steve.
That's the look. I was looking at things in terms of strong dips and big rises and all that. I came up with Takabisha. Look that one up. Sorry, Joe, that's the one you meant.
That's the one I had.
Beg your pardon. Okay, so
we're just looking at the volatility.
Very similar, though, isn't it?
It's very similar in daily cheese prices in the States, and just thought we'd have a bit of a chat about what's causing this, Steve, because we've really got a bit of a perfect storm over there between what's happening with milk supply and what's going on with demand.
So here's three of the pictures that help put that together, I guess. Milk supply came out a couple of days ago, up 3% in December.
Yep.
They revised the November number to be up 3.5%. So cow numbers, as you can see in there, are moving up. So that's an indicator that we'll see solid growth in milk for a while yet, several months. Yield is also, moving up as well. The corn conditions were quite good, so cows are producing milk. A big chunk of that is in the middle of the country, which is cheese-based. Cheese output is surging alongside of that, but the challenge for cheese on the left is that demand isn't growing.
No.
Demand is just above positive with assistance, with government assistance that we saw in the last quarter of the year. And the December numbers that also shocked some of that price response this week was that stock numbers came out and showed a big jump in American cheese stocks.
Yeah.
Read that, cheddar.
Yeah.
And
other cheese, mozzarella, proxy, food service was also higher. So cheese stocks overall rose, didn't they?
Rose, yeah. So it indicates demand probably dipped in December when there wasn't as much direct support provided by the government. We're going into a new year, and the other thing that's recently happened was the announced purchase program for the food box purchases by the USDA, which was disappointing for the market. The clearance of stock, or the use of stocks in that program is going to be a lot slower than what was expected when the bill came out, the stimulus bill. So that's given a good hefty thump back to
reality,
back to the cheese price, and that last dip down. So we're back down to pretty low levels. On the upside from here, you would expect if that's a cheddar price, you'd see demand pick up through grocery, and that might come. But we've got a lot of the US consuming public financially stressed. Going to food banks and looking
still waiting for those checks.
So not a great shape for a market to be in. All right, on that happy note, that's all from us. Thanks for watching. We'll be back next week.